Hi everyone, I'm back here with Marc Leroux from the Cardinal Realty Group for your Real Estate Minute. We are talking adjustment. The market is going to be adjusting or feels like it's adjusting, or the rumors are that it's adjusting. Talk to me, tell me what I have to be afraid of, and if I'm buying or selling, what's that going to mean to me?
Sure. Rhonda, thank you for having me. It's great to be here again. So a lot of people are worried these days, looking at the interest rates going up, the talk about property values going down, and all of these are very scary for property owners, but also for people buying and selling property. How will that affect them? And so there's a couple things that I want to make, clear to everyone. Rates are not at a normal level.
When you say rates, you mean interest rates?
Interest rates have been extremely low. 3% or less is not normal for a working economy.
Okay.
So if interest rates around 5-6% are considered normal and fine. So as we move back up to a normal interest rate, there's an adjustment and people will feel the crunch when it comes time to pay their mortgages. But adjustments will be made and people will survive. We're not talking about the rates of the 80s, 18 to 22%.
I live that.
Those sorts of interest rates. So that's the first thing. We're not in a catastrophe of rising interest rates. We're just going back to a normal level of interest rates. Secondly, in terms of prices. So prices have gone up in some sectors 50% since the beginning of the pandemic.
Yep.
That's huge. Not sustainable, not good for people buying. It's great if you own a property, but frankly, it's not sustainable because people's jobs are not giving them 50% more revenue.
Yeah, we didn't get an upscale paycheck of 50%.
Right. So if property values are worth 50% more, then how are people supposed to afford properties if they were having trouble before the pandemic? So even if the market corrects itself and property values go down 10-15%, we'll still be 35% higher than at the beginning of the pandemic.
We've gone up. We're spoiled with the interest rate, and we're spoiled as sellers. We're spoiled.
Yeah.
Buyers are not getting in. Kids aren't getting in. Young families can't get in. So this would be an adjustment to help them out.
That is true. So what is not sustainable is the current market, the market the way it is. If you're a property owner, you're seeing your property values increase and it looks and feels great. But if you've tried to buy property in the last 2 years and realized how frustrating it is when you're up against 16, 17 offers and you have to go way over asking price, you're not sure how much and it's so stressful, then you realize that something has to change. And if you want to sell, but you can't because you don't know where to go, buying a property is so difficult, then you're holding onto that property even though it's not the right one for you. So with property values being corrected, interest rates, however much they go up over the next year or two, you're going to have more opportunities. Buyers are going to be able to buy properties, sellers are going to be able to sell their properties and buy properties, and all of a sudden this balanced market is going to be great for everyone. So when you see the headlines, don't be afraid.
That's good advice, because I've been kind of shaky about it. I do investment properties, and I've been worried about, like, if I buy them too high, then I'm not going to be able to handle. I've been actually waiting till it softens, because I need it to be stable in order to set a rate for my rentals that makes sense and will be sustainable. So I won't be sustainable unless I pick a time when I can actually make it work.
So this is something that's on a lot of people's mind. So you're talking about timing the market, and with the real estate market, it's not about timing the market so much as time in the market. So if you're looking to get in and out, then be careful about when you do it. The last couple of years were a good time for that. The next couple of years may not be a good time for that. But if you're looking to buy and you're going to be holding it for 10, 15, 20 years, even if the market corrects itself 10, 15% over the next year, which it could, you're still going to make lots of money in the long run. And that's really where you have to have your eye on the ball.
So now we're also starting to see some signs on the lawns that actually stay there for more than a day.
True.
We're actually getting a little bit of, like, the panic seems to be relieving.
Isn't that great?
Bill 96 is not helping us. I don't think that's giving us a lot of.
I have to agree that I've had a few conversations about Bill 96 and how some people feel less comfortable with the Montreal real estate with all of this talk of Bill 96 going on. I think interest rates are having more of an effect on the Montreal real estate market, but the other thing is, don't forget, there's not enough properties in Montreal for the demand that we have, and it's not going to be a few adjustments, rates, or bills that are going to completely stop the demand for Montreal properties. So that's why I think we're going to have a soft landing here in Montreal, and everything is going to be fine.
All right. Should you need real estate advice, Marc Leroux from the Cardinal Realty Group is available at your service at all times, and he's got a team, so that if You need extra services, he's got that covered, right?
Right.
All right.
Thank you, Rhonda.
All right. So if you have a business or any adventures you'd like to share on the West Island News, let us know. We are here for you at all times. Check us out, West Island News. Follow us on Facebook and on Instagram.